What's up guys, welcome back to DCA. So what we're going to do in this video is take a look at one of these metrics that we're going to be releasing on polaritydigital.io. So if you're unfamiliar with what that is, this is a website that I've been developing in collaboration with the guys over at Upside Down Data that will be releasing officially next Tuesday. You know, I made the announcement in the last video that we're going to be launching this site and we're going to be launching a paid membership, a pro membership for the site. The initial launch is going to have a deep discount on the monthly membership, and that's going to be $10 for the first 24 hours that we launch. And so that's officially going to be next Tuesday. So we'll be launching around 12 a.m. Eastern time on Tuesday, and then we'll have 24 hours to sign up for that discounted rate of $10. Okay. So if you lock in at $10 on the first day, that's going to be set in stone. After that, we'll increase the price and it's never going to come back down to $10. You know, at $10 a month, if you're able to lock in at that level, I think the value created on our site is, you know, quite frankly, the metrics that we're providing here are vastly superior than many other sources out there that are charging over $100 a month. So we do want to offer this opportunity to lock in at that lower rate, especially for the people who have been watching our channel for, you know, over a year at this point. So it's kind of a thing of appreciation to our long-term followers. Tuesday, come on to polaritydigital.io and you'll be able to get in at that rate. After that, it's going up and we're not going to come back down. Today, what I want to look at is this metric that we have called the market direction classifier. And I want to see where we're at right now. I want to take a look at why this metric is so powerful and perhaps one of the pitfalls that investors can stumble into with this metric because of these markets that sort of just chop sideways. So we've been in a range from around 26K all the way up to around 31K, you know, several months now. So back in March, we kind of broke above some of these lower levels that we had been sitting at down in the lower 20Ks. And it all kind of happened with this big rally that we saw in the beginning of March. And we've been chopping sideways ever since that. And so today I want to look at the market direction classifier and kind of talk about how it's easy to fall into a trap when we're in these sideways markets. Because ultimately what this metric is doing is it's attempting to identify for us big swings in the market when the market is either in an uptrend or a downtrend. But when you have a metric that specializes in finding trends and there simply isn't a trend like we're seeing right now, you can kind of get into these scenarios where the metric becomes difficult for the average person to interpret. So I want to look at that today. And then I want to quickly dive into another metric that we will be releasing. Actually, some people have been able to try out the MDC because we've had an open beta test on this site for months now. But we're going to be releasing a new metric that's only going to be available to the pro members. And, you know, the MDC will also only be available to the pro members. But this new metric that we're coming out with, the market cycle and the market trend models, these new metrics, no one's really had a chance to test out yet because we've had these only on our private server. So we're going to dive into those today, and we're going to look at how different kinds of investors can utilize these two different metrics and why these metrics may favor one type of investor over the other. And so a lot of it comes down to knowing yourself, knowing what kind of investor you are, and, you know, being realistic with yourself. If you aren't someone who can be more on top of the market, kind of looking at the metrics every day, kind of trying to understand what's happening, perhaps one of these metrics is better for you than the other. And we'll kind of look at those comparisons today. So with that all said, let's just start by looking at the price here. So, you know, like I said, we've basically been in this trend now for quite some time, but overall it's a slightly downward trend. So back here in March, when we broke above up to around 30K, we've kind of been chopping along here in this type of pattern where we're just kind of moving downward in this channel. So we've been forming this downward channel after this big move that we made to the upside. So the fact that we're in this downward channel right now, what exactly does this mean? I think one thing you have to look at is the fact that a lot of this rally to the upside has come along with the stock market. The market has performed exceedingly well. And, you know, we do have economic data here on polaritydigital.io. So if we just bring up the NASDAQ 100, you can see that this rally almost perfectly coincides with the stock market. So you have the NASDAQ here in green, and you'll notice that the NASDAQ has been performing exceedingly well. So right when we came to the end of 2022, the market has basically been rallying all through this year, right? Okay, so we're up here almost at 15K now. We're sitting at around 14.5 at the moment. Now, if you look at this, the crypto market was kind of moving directly in tandem with the stock market, right? And that had been the case all the way until about right here. So the NASDAQ was up, the crypto market was up. The NASDAQ was down. For the most part, the crypto market was down. You can see they even kind of bottom out and kind of peak at the same points. Now, that all sort of changed around here in April. So the volume for the crypto market has kind of been trailing off. We've seen the market kind of declining. Interest in the crypto market has been declining. So, you know, it's very conceivable that we get some kind of correction here. And with some of the news that we've had in the crypto market recently, namely Binance, I think you could see a rather large size correction in the crypto market as we've sort of seen the stock market continue to rally while the crypto market has taken a fairly extended at this point, you know, all of April, May, and now we're into June, a sort of contraction where we're in this downward channel that we initially looked at. Just to briefly touch on this, in addition to what we're going to look at with the metrics, I think the news about Binance, if I had to give my opinion on it, I would say mildly beneficial for Bitcoin. While if we look at how it's going to affect the overall market for the altcoins, I think it's probably going to be, again, mildly negative. But I just have a hard time seeing the SEC kind of have an effective outcome here, especially given that, you know, they've been battling a single court case with XRP for years at this point. All right. So with all that said, let's hop into the MDC. All right. So let me start quickly by saying one other thing. If you're still using the beta test site, we've kind of stopped supporting the beta test site about, you know, going on 2 months ago at this point. So if you've been running into some bugs on that and on that part of the site, you know, that's to be expected because we've changed a lot of things on the back end. And we've actually stopped updating the beta test site because we're kind of transitioning into the full production launch. And because of that, you know, it just doesn't make sense to be updating parts of the beta test site and not other parts of it. So we've stopped supporting the beta test site and we've kind of wrapped up the beta test. You know, it's still there. You can still go on, you know, on the site and try it out. But the, you know, the full service that we'll be launching next Tuesday, that is, you know, it's substantially improved from what you may have seen in the past. What you may have seen on the beta test site. There's still going to be some things in production, some things that aren't necessarily 100% functional, but all of the metrics are going to be there. And for the most part, it's a vastly improved site compared to some of the older versions. So if you go on there and you're having some problems loading a metric or kind of exactly following along with what I'm doing, that's to be expected because we've changed some things and they're no longer compatible with the beta test site. What I'm going to do here is I'm just going to come in to load a metric, and you can see that you're actually able to sort these by only assets that have risk metrics. So if you only want to see the things that have risk metrics, you're able to do that on here. So we'll come in and we'll load Bitcoin and we'll load the MDC. Each of these metrics has a designation, M1 and M2, and that's just kind of the variable name for the metric, which you can use to create formulas. So we have these on various y-axes. So you'll notice that Bitcoin price is on Y1 and the MDC price is on Y2. And these are color coded, but you can also quickly just switch these around. And then we've created this interface here so you can see where you're storing each of the metrics. So these are both on Y1. In other words, this axis here. And these just go Y1, Y2, Y3, Y4, etc. All right. We have the Bitcoin price in white and then our MDC in green. And you'll notice that this metric, if you're unfamiliar with what it does, it is attempting to identify for you where a price breakout occurs. All right. So when the price drives above this MDC in green, that is indicative of a bullish signal. When it drives below, it's more indicative of a bearish signal. Now, there are going to be fake outs. And when do these fake outs tend to occur? Well, we see that these happen to be during times of more sideways movement in the market. So if we come back here to September, for instance, the market had these blips where it would drive above the MDC, but for the most part, it was telling you that we were in a downtrend. And so actually, if you look at the data, if you were using the MDC both in long positions and short positions during 2022, when the market was down, from the start of 2022, we were probably right at around 50K, all the way till the end of 2022, which was around right here. So from 50K all the way down to 16K, if you were trading both long and short on the MDC, you would have been up approximately 65% on the year just with Bitcoin. So, in spite of the fact that we've seen these kind of fake outs, and we have seen them now, if we just start back here in May, we've seen numerous little tiny fake outs for Bitcoin. And that is all because the market volatility has been extremely low. And when there's extremely low market volatility, the MDC really can't decide what the trend is because there is no established trend. A model which is identifying a trend for you can't identify anything when there is no trend. And that's exactly what we've mostly ran into. But if we look at this from the beginning of the year, the MDC first told us to get in right at around here, right at around $17,800. And then it had us in all the way through here. We had another little fake out, right? It kind of thought that the market may be heading into a downtrend here, right at around 20.3K. But then it got us back in, and it didn't get us out of the market again until around 27K. So if you were in the MDC, you got in at around 17.8, and for the most part, we're in the market all the way up to until around 27K. And since that time, it's mostly been in a downtrend, but we have had these little fake outs. So overall, if we just look at the numbers, you've been up nearly 50% just using the MDC since the beginning of the year. All right. So these little fake outs, while yes, they can be somewhat annoying, and I can understand they're frustrating for people who are using the MDC because, okay, today I'm in, tomorrow I'm out, today I'm in, tomorrow I'm out, that kind of thing. That is a risk you take in a low volatility market like we've been experiencing going on 2 to 3 months at this point. But importantly, we caught the huge swing in the market. We caught the swing starting at 17.8. And we started to get out of the market all the way up here at around 27.5. All right. So, it's this kind of thing where, yes, we've had a few little losses, and, we're talking about just a few percent here, right? Each of these losses, some of them even less than 1%, and a couple of them have been slightly bigger. But as we released this metric all the way back here. We released the metric right before the price crossed above the MDC. At least we launched it in terms of putting it out there for the public to use. So we launched this site and the public availability of this metric right at the beginning of the year. And if you've been following the site, you've been the beneficiary of this entire run. So while, yes, this low volatility market that we've been in right now has had these little fake outs, overall, you have to look at the big picture. Not every single trade you make is going to be a win. And not every time the MDC identifies a trend, is there going to necessarily be a follow through on that trend. Now, what is an approach you can then take in order to kind of mitigate these sort of events that where we're seeing, the price swing above and then it swings right back below? Well, something you can do is by simply looking at the market. And, we're actually working on doing something where we kind of come out with a more defined plan for how people can approach this, and maybe even some type of addition to the indicator, which will help identify what the volatility in the market is. But something you can do is not necessarily go all in or all out with each individual swing of the MDC. So let's say you're out of the market and we kind of swing above for one day or swing above for maybe 2 days. Well, you want to see some follow through, right? So like we swung above the MDC here in the end of May, May 28th, we swung above, but then you kind of instantly started to see the price coming back down to the MDC. And so that is going to be a perfect example of somewhere where, all right, well, we're in this overall downtrend and we did break above the MDC here. Maybe I'm not going to go all in. Maybe I'll only get in 10% today. And maybe I'll kind of follow that up over time as we start to break above. Now, if you kind of let's compare that to the end of the year when we broke above right here. We were in more of a upwards channel at this point, right? When we look at the price here, the price had been kind of trending up like this and not trending down like we've seen over the last couple months. So we were in this upward trend and then we broke above the MDC convincingly. In this case, we've been in more of a downwards trend. It's very rare to see the price trending down, and then just all of a sudden go on a massive price run to the upside. There's going to be sort of a shakeout, kind of shaking out some of these less strong hands that have kind of bought during this time and they're just in it for the short-term trade. So even if we were to break to the upside, there's probably going to be some shakeouts back to the downside. And I think that's very likely what you're seeing now. Now, the Binance events may put us on a path towards a longer-term downtrend here, and that's yet to be seen. But, you just have to imagine we're in a position right now where we're approaching, we're not that far out from the next halving. And so this is the opportunity for investors to be acquiring one way or the other. So even if you are using the MDC, I still kind of think that, dollar cost averaging into the market in general is still a good approach for you because, you're not going to be, I don't think, quite frankly, personally, I don't think that 2 years down the road or 3 years down the road, you're going to be sad that you bought Bitcoin at 27K. I could be totally off about that. World events, political events, sort of governmental effects can take place that completely blow my opinions out of the water. But that's my general opinion, is that even if you're buying up here at 27, 28K, you're not going to be too sad about that several years down the road. But for the users of the MDC, you can look at these very basic trends and say to yourself, well, even if we break above the MDC right now, while we're in a downtrend, while we're in this downtrend that's been going on for several months, even though it's a very minor downtrend, it's very mild, right? We're in this downtrend. I see that there's low market volatility. Like, let's face it, guys, oscillation between 27K to 30K to 26K to 28K, that's nothing. Just go back to the past. Look at these moves we've seen in the past. So if we just come back to 21, you can see that even back at this time, like we'd get up to 40K and then we'd drive all the way back down to around 33K, 30K, right? So we had these much larger moves happening in a very short amount of time. And importantly, you'll notice that the MDC was right there telling you when to get in and when to get out. Again, you'll notice there were these little fake outs here, But if you were using this kind of approach where, all right, I want to see the market go on this uptrend and I'm not going to just kind of go all in on day one. I'm not going to go all in at 10.6K. I'm going to kind of wait for some follow through. We had another little fake out, but we broke back above the MDC. And if you're just saying to yourself, all right, I just want to see a little follow through. So maybe you're going 10% on one day, 10% on the next, maybe 20%, because now you're starting to see follow through. And then you're all in. And when I say all in, I mean whatever amount you're going to contribute to the MDC. You're in by 11.3K, 11.5K, right? And then you're off to the races and you drive that 11K all the way up until we break below the MDC, kind of right here, 37K. And it gets you out from 37 all the way down to around 33, right? So even if you shorted here, you were profitable. You were profitable all the way up and then all the way down and then all the way up again. So from 34 all the way back up to 57. All right, so the MDC has been absolutely massive in that regard. Overall, we're in this longer term uptrend, and we'll just take a look at this here. We're in this longer term uptrend. We're sitting right at the support level. We bounced off of it as we would expect, where, anytime you come up to a rather large support level, we kind of bounced off of it. And so now we're coming back to the MDC again. If we break above, you don't necessarily need to go all in on day one. You can kind of test the waters, especially since we're in this downtrend in the setting of a longer term uptrend. So, we've kind of published a few papers talking about the MDC, talking about the results of the MDC. And, I think anyone who's read them probably doesn't need much more convincing. But I do think it's important to talk about how you can kind of handle these low volatility periods of the market. So that's a long-winded way of talking about the MDC and sort of how to deal with these sideways markets. Now, what I want to show you is one of the new metrics we'll be releasing, and this is one of the ones really, quite frankly, no one has seen, right? Because we don't offer this on the test site yet. So what I'm going to do here is we'll just hide the MDC, and we're going to create a little formula here. And so all we're going to do is make an if statement. And you'll remember that I said these each have a little variable name. So it's if M1 is greater than, and we want to look at M3 specifically, right? Bitcoin market cycle model, M3. And so if M1 is greater than, and this says M2 because that's the default, but we're going to change that to M3, then I want you to show me M1. And if it's not greater than M3, show me nothing, show nothing at all. So we'll do evaluate and draw. We'll get this output. We'll move this onto the same axis because we want everything to be on the same axis here. And then we'll just give this a better color here. Okay. So what I've done here is, I've created this formula, and this is the kind of thing where we'll be putting videos like this out for the subscribers. So anyone who's a pro member subscriber, we'll be putting videos like this out, and we'll always kind of show you the formulas we're using and kind of show you how to recreate them. And then you can save them to your own charts. That's the kind of thing you'll be able to do here. You'll be able to just come in, save the chart, and it will be here on a drop down for you. You'll be able to load it onto your right onto your screen, and you'll be able to follow along with it. Now, what I'm going to show you today only goes up to right here, the beginning of the year. We want to keep this metric in place so that only the pro subscribers will actually get to see the newer data. So we have these two models that we'll be releasing, and one of them is called the market cycle model, and one of them is called the market trend model. They both do a very similar thing. So I'm only going to look at the market cycle model today. Essentially, they're both attempting to identify for the investor what is the overall trend. So this is going to be perfect for someone. So here's the MDC. We're going to bring it back now. So you'll notice that, and I'll make this a different color. All right, so we have the MDC in blue. You'll notice that the MDC is going to be for a much more active investor. There's more times when the MDC is going to require of you to get in or get out of the market. So during any given kind of trend, you may have 20 or 30 different times where the MDC suggests to get in or out compared to the market trend model or the market cycle model. In this case, the market cycle model, when the price of Bitcoin is green, that's going to be an uptrend for the market. And you'll notice that this model perfectly, I'm going to hide the MDC again, this model almost perfectly identifies for us the overall major market moves. Now, ignore this part here because remember, we're not actually publishing this yet. So, kind of keeping it a secret until the actual site goes live next Tuesday. But you'll notice that when we're in these uptrends, like here, right, we basically capture the entire uptrend. And then we kind of get out of the market right at the top. Right as the top occurs, the market cycle model flips over the price, and that suggests a downtrend. We stay above the price with the market cycle model all the way down here until around March of 2015. And then it says, hey, it looks like we're in an uptrend. Now, notice the price didn't immediately start going up. In fact, it kind of got you in right at around 240 and then actually went all the way down to 190. But it was saying, hey, don't worry, we're still in an uptrend. And sure enough, that took us all the way from 240 or whatever it was, all the way up to around 20K, where the model then said, hey, now we're in a downtrend. And sure enough, same thing. And so we've seen that where, it took you all the way down to the bottom back here in 2018 and then drove us all the way up to the top almost right around here, right around 52K. And that's where it got us out of the market. All right. So we've been out of this market all the way until right here, and you'll see that it still kind of has us out of the market. So this is something that will be much better for someone who doesn't want to be doing any sort of active investment. It's going to be much more beneficial for someone who wants to, should I be in or should I be out? Just let me know. And so this person can get in here and start either lump sum investing or dollar cost averaging. And then they can either sell and then take a short position as we're in a downtrend. And so this has been a hugely profitable strategy, and it's really essentially taken no work. Now, at the same time, what you can do is kind of combine these strategies. You could combine the MDC and a model like this, and you could use this to confirm whether you're kind of in an uptrend and you only want to kind of go into swings above the MDC, or do you only want to kind of go into swings below the MDC where you're shorting during those times. And so that's a valid option. And I think, I haven't necessarily tested those yet, but I think that could be a very profitable strategy. And it will be something that will be interesting to look forward to as we start to, interface with the new pro members. Because one of the things we've found is, when we have this large collection of people and we've empowered them to take these metrics and to do types of analysis directly on the site, directly with the data, especially for people that don't need to know coding or don't know coding, we've had this large collection of people now coming up and finding various types of patterns in the data that I don't think, Mark, myself, and Joe would have necessarily found by ourselves. Because when we're able to sort of crowdsource this information, I think it leads to a lot of interesting information coming out. And it's been one of the more powerful parts of having tools like this. So this is polaritydigital.io. Remember, if you go on the site right now, you're not going to be looking at the same version I'm looking at here. That won't be out until Tuesday. And a lot of these metrics aren't even out now, but it's a very powerful tool, and we're going to be offering it for $10 a month. Starting next Tuesday. You'll have 1 day to lock in at that rate, and then the price is going to go up and it's not coming back down. So that's going to be it for this one, guys. I hope you enjoyed this, and until next time, as usual, see you.